Time for hot picks. Our guest has three ideas in energy generation and renewable fuels. He says one advantage here is predictable contracted revenue streams backed up by major corporations and federal government policy. We're joined by Shawn Severson, CEO and co-founder at Water Tower Research. Thanks very much indeed for joining us. You got some fresh names for us. This is great. Liberty Energy, tell us what they do and why you like the look of them.
Yeah, great. Thanks, Andy. Yeah, I think one of the things that, has been a big trend is obviously power generation, consumption in AI and data centers. And there have been so many obvious plays out there that people have looked at, like Oklo or through to Constellation and NRG, and really driving into this. But peeling back the layers and getting into some of these other companies like Liberty is particularly attractive because they have an emerging business that really is driving a transformation of their overall mix. And that's what they call Liberty Power Innovations, or LPI. And they launched that in April 2023. And this is really developing a big presence in distributed power generation driven by natural gas, which is a whole nother bridge fuel and bridge technology that's out there. We don't call it technology, but bridge fuel. And they're really been moving and making great strides in that area. So we like that trend. We like how they fit into the power demand equation, and yet, not maybe as discovered as some of the other plays out there.
Did we look at the stock? I can't remember. LBRT. So are they running small? How are they using natural gas?
Yeah, so it's in distributed power generation, so on-site production. So this is using power gen, again, right on data center sites. And natural gas, I think people are, sometimes forget that it's an incredible bridge technology and is going to be a key part of the power generation ecosystem. And in fact, they struck a deal with Oklo on, using the SMRs and the nuclear side on site. Oh. But as a bridge technology, natural gas is playing a part here, and Liberty Energy transforming their business into driving, driving more business out of the distributed energy side is going to be key.
Your next idea, Rex American Resources. They're active in renewable fuels and carbon capture.
Yeah, so, I think part of looking at energy generation, one of the things that is oftentimes forgotten is that the agricultural ecosystem can play a very important part in fuels. I always think of oil, but Rex American's a good example of an ethanol company that is expanding into carbon capture, creating low carbon ethanol. They're able to generate credits from the Z45 and the other tailwinds that are out there in the regulatory environment driving towards that. And I think also E15, which is an initiative in the U.S. to expand the mix of ethanol from 10% to 15%, driving a lot of demand for ethanol, particularly low carbon ethanol. And I think this is often forgotten as as a key part of the fuel infrastructure in the United States.
Now, our chart showed a big drop, but I think Rex just split the stock 2-for-1, so that may be distorting things.
They did, yeah. yes. And it was a rocky road in the beginning because there were questions about how 45Z and 45Q were going to play out when the new administration came in. But, after everybody had a chance to digest that, they realized that, the extension of the tax credit, the business fundamentals were staying strong. And, I think it started to catch some investor attention overall across, the renewable fuel sector and ethanol.
And then your final idea is involved in renewable aviation fuel.
Yes. Yeah, GEVO, ticker GEVO. The sustainable aviation fuel market is very interesting. And this is because if you look at the airline industry, really the only way that they can reduce carbon is through fuel. I mean, recycling your Coke can on the airplane isn't going to do it, right? So you have to have a solution on the fuel side. And SAF is really the only solution that helps get those targets achieved. And jet fuel demand has been growing. Estimates are around 9%. And the refining capacity is shrinking. This is putting a lot of pressure on the system, both from looking for carbon reduction and growing demand. And SAF and GEVO in particular, sits right smack dab in the middle of that trend. And, estimates are that, you could produce 70 alcohol to jet facilities. And remember, they're using this out of renewable fuels, renewable sources. So corn, in the case of GEVO, but carbohydrates in general, being a renewable source that, from the field to the wing.
From the field to the wing. So corn and other plants, starchy plants, the essential feedstock here?
That's right. That's right. And it's a drop in fuel. And this is a very important thing to think about as well, looking at renewable fuels, is drop-in fuels like SAF can fit into the existing infrastructure that's out there. So you can mix it with petroleum-based jet fuel. You don't have to have separate infrastructures for transportation or mixing. So it really is a drop-in solution. And people are starting to notice this. It's going to be an issue that people are addressing. People being big airlines are addressing over the coming decade. And again, SAF is going to be the solution for them.
We'd better leave it there. Shawn, thank you very much indeed for joining us.
Thank you very much for having me.
Shawn Severson, CEO and co-founder at Water Tower Research.